Unfiltered opinions.
Sometimes you have ideas and you're not quite sure why.
As you secure the bag.
Sometimes you meet people and realize there's probably a reason why you stayed in touch.
Just listen.
Sometimes all the pieces just come together by themselves.
I'm Jimmy Moyaha.
And I'm Simon Brown.
Welcome to Insider Exchange.
Hi, I'm Sean. I was with Jimmy and Simon on Insider Exchange on Market Matters. Unfortunately, I've been kicked off, so I won't be in the deep dive. And we move on to our deep dive. This week, we are diving into the VAT increase that never took place. We're going to look at the merits behind it, whether or not it was absolutely necessary and the only thing that could have been done, and where we go to from here.
Well, we go back to Cape Town on the 12th of March. That's the first thing we do, right?
That's the first thing, to hear whether or not this VAT increase is going to come out. I mean, 2% in numbers terms. This is according to National Treasury, not according to me. As part of that budget speech at the table, they said the 2% would work out to around 58 to 60 billion rands in added revenue per year for the state, I suppose, right? And for me, I'd done a random exercise ahead of the 2024 budget speech. So ahead of last year's budget speech, I'd done a random exercise on how to save 30 billion rand from the budget, which by the 2% standards is 1%, right? And I found that you could do two things and you would save the 30 billion rand from our expenditure side of it. Before I get into that, Si, I want you to recap on those three things you said. You said adjusting a budget is three things. It's increasing revenues,
which is tax.
Okay.
Well, there's two ways to increase revenue: tax or growth, and then the other one is cut spending.
Right.
It's always alarmingly easy, it seems, in South Africa's example. I mean, 20 years ago, Trevor Manuel was cutting our taxes, our income tax and stuff. But, it's a really blunt and lazy way to say we've got to do this by doing a 2% VAT. I mean, 60 billion, and you've got some numbers there. Come on, really? And if we were doing 4% growth, we wouldn't need any of this.
We wouldn't. It wouldn't matter. It wouldn't make a difference.
And how much money have we given to SOEs over the last decade? 10 times that?
Yeah, and I mean, if you look at an SOE like Post Office, they're looking for 4 billion rand right now, right? So, interestingly enough, in that budget speech that we didn't have tabled, there was no mention of SOE bailouts, but we might be in for some news coming out in a couple of weeks on the 12th of March, so we'll see how that shapes up. But back to the numbers, yes. So, you said that one of the methods is trimming the fat. So, the exercise I did, I looked at a very specific cohort of individuals. I looked at just 55,000 government officials. Now, not government officials. So remember, the public sector wage bill and the government employees bill accounts for everyone from teachers to nurses to doctors.
Policemen.
Right.
Parliamentarians.
Right. Now, I specifically didn't look at the lower end, the teachers, the nurses, the firemen, the police. I looked at individuals earning 1.2 million rand or more.
Okay,
so that would be right. So that would be your director generals. That would be your members of parliament. That would be your higher end of that scale. And I found that if we slash the salaries of 55,000 specific individuals earning above 1.2 million, from 1.2 million just to 750,000 rand. And the reason I used 750,000 rand was quite interesting because Glassdoor said to me that the average PhD lecturer in South Africa, or the average person with a doctorate, earns 750,000 rand per annum. The average medical doctor earns about 720,000 rand per annum. So I kind of used that as a barometer to say you'd still be getting paid the equivalent of a PhD
a year,
right?
Rather, it's money.
So if we cut just that in terms of trimming the fat, those 55,000 salaries specifically, we would save from the 780 billion rand of the public sector wage bill, we would save 26.4 billion rand off of just those numbers. Just 55,000 people would save 26 billion rand, right? Then I looked at the second line item, VIP protection. And now, obviously, that's not going to be something that people want to hear about. But VIP protection that was spent at the time I was looking at it was around 3.4 billion rand. Of that 3.4 billion rand, 2 billion rand was being spent on 280 individuals. Right? Stay with me here. Stay with me for a second. It makes sense. That 2 billion over 280 individuals works out to 7.142 million rand per individual per year on security. Now, I don't know how much an X5 costs. I don't know how much state security costs, but surely we don't need to be spending that much money. Anyway, put that number aside. So I took the 3.4 billion less the 2 billion, couple of rounding errors here and there, got us to what we were looking at in terms of the 3.4 billion, adding that to the 26.4 that we saved on the public sector wage bill side of it, and we get 30 billion rand of savings. There's 1% of VAT we don't need to cut.
And the rest is I mean, I go back to an old story, and I can't remember the numbers, but they're out of date. We spend 5 times more per student than Mozambique on education, and yet they're in the top quartile and we're in the bottom quartile. And that just says to you, it's not about having the money, which we don't have. And it's not even about Zondo and fraud and corruption and everything. It's just we are so inefficient at spending it. And sometimes it's sad too, and because, I mean, there are brilliant teachers out there, but there are also ghost teachers. There's a lot that and is cutting a budget painful? Yes, of course it is. But let's be clear, this is like times require it.
That's it. This is for the greater good. This is one of those times where you don't need to be having the poorest of the poor carry a burden for
and
an overweight.
Poor people disproportionately because they tend to spend all their money, whereas us rich oaks are going to save some and etc. So yeah,
that's it.
And I know that I mean the deep irony is that finally they want to move poultry to VAT free. Man, Cricket has been saying that for 20 years. He retires. And it happened.
That's it. The Poultry Association themselves have also been saying, guys, we don't understand this. We don't understand how this is. And I think the last stat I remember, I vaguely remember this. I don't know if it's 100% correct, but I think it was that the poultry segment made up 60% of the protein consumption of South Africans, if I remember correctly. So it was significant. It was more than 50%. It was one of those things where it was a staple for many South Africans. Yeah. And so for you to not have that VAT exempt from the beginning or VAT reduced also didn't really make sense. But the things that we're saying here are not what people want to hear. For anyone that's interested in those numbers and looking at those numbers that I mentioned a little earlier, there is an article that I had written and published. It is in the public domain, so you can go re-verify those numbers yourselves. I'll share the link to the article when we put up the episode. You can very freely go and look at those numbers. If you disagree with them, I'd love to hear your take on that as well. But yes, there are other ways to fix this. One of those other ways is what Commissioner of SARS, Edward Kieswetter, said.
Yeah.
And he was very clear
like
that there's no
billion.
reason to increase VAT. And I've always appreciated his honesty. I speak to him every budget, every year without fail. Even during the midterm budget, sometimes we catch up. But every year without fail, he says, this is what SARS is doing. This is what we need to do. This is where we need to optimize things. He's really doing what he was put as the commissioner to do. And for him to come out before the budget speech and say, this is not necessary.
He knows SARS inside out. So if he's saying there's 800, when he said 800 billion, now he's not going to catch all of it, but if you just catch 10% of it, boom, we can actually drop VAT 1%.
That's
maybe.
it.
And it just, and it goes back to, it's the laziness of it. It's like, when you're doing a household budget and there's not enough money, and instead you say, I'll get a side hustle.
I'll just borrow from the credit card
or something. It's like, no, man, that's just like that's not practical. Like, the budgets are hard. Budgets are often painful. Ours is going to be both hard and painful. Make it happen.
I'm afraid to explore. So after I did this exercise with the numbers, it literally terrified me to go and look for other things. So think about Doge, right? Elon Musk, the US, setting up this, looking for inefficiencies and all of that. If we were to do the same exercise in South Africa, I'm afraid of what we would find.
Yeah, I mean, yes, and I mean, so Elon Musk isn't finding much so far. He's just randomly,
he's just picking at things.
But the whole thing, and it's where Elon's going wrong with Doge. Someone said to him the weekend, it's actually pronounced doggy. Where he's going wrong with it is he just goes in and he's firing individuals willy-nilly and people he doesn't like and cancelling contracts he doesn't like, etc. But good old-fashioned forensic auditing. You go into a department, you do a forensic audit, you come out the other side and you say there is or there isn't waste happening here. It's not that hard.
So the thing is, in South Africa, we don't need a forensic audit. The AG comes out and says, this is the wasteful expenditure amount. We have the amounts given to us. And that's what's confusing is they tell you up front, this is how much was wasteful expenditure in the past year. This is how much was wasteful expenditure that we reported on. This was things that were unaccounted for. I had a look at the ESCOM financials for the latest set of financials. And the audit report that comes along the financials. And I discussed these financials with the ESCOM CFO, Kasim. In the audit report, there's 12 pages of material misstatements, things that don't make sense to the auditors, numbers here that don't align here and all of that. How do you have 12 pages of things you need to look at? And then we're going to say that we don't know where to start looking for the money.
Yeah, there's
the auditors have done the work
there's
for
a
you.
place to start right
And that
there.
wasn't even a forensic audit. That was an annual audit done in the regular course of business.
And most of the cities the country over, but ignore the cities because it's a different part of where the money sits. But at our SOEs, at our parliamentary buildings, at all of those sort of things, there is space and there is undoubtedly money which can be picked up. And to your point, the Auditor General points it to us every single year.
That's it. So why are we not making the difference? Instead, why are we then looking to... Okay, so we've been clear that you can reduce expenditure. That's the one method. The other one was... increasing revenue. We've discussed that taxing people more or taxing an already overtaxed South African is not the solution.
Yeah.
Let's look at the third one, economic growth.
Well, yeah.
Now, that one seems like a no-brainer, but for some reason, I saw in the budget speech that would have been tabled that they'd revised economic growth down for the 2024 year to 0.8%, down from what they had it in the midterm budget policy statement. So even then, National Treasury seeing that economic growth is not going where it's supposed to be going. But what's being done? Granted, it's not only Treasury's responsibility to fuel growth, but surely we should
what's been done is all the wrong things, like our Transnet doesn't work, our rail lines to Saldana and Richards Bay Coal Terminal are broken. We're sitting here in stage 4 load shedding, 6 over the weekend. It's all of those things which are fundamentally crippling growth. Now, another, issues around red tape. Here's an example, and again, this is an old report, so I don't remember the number. The threshold for a business to register for VAT is $1 million.
Yes.
When was that put in place? 15 years ago? 20
Possibly.
years ago?
Yeah.
So it's $1 million. Raise that to 5 million. Take a lot of pressure. Let's be clear. No one is saying, I'm not going to start a business because of VAT threshold.
Yes.
That's bogus. But you've started a little business, and you get to $1 million, and suddenly the amount of paperwork and chaos and craze.
And most of the time, I didn't even know I was going to get to $1 million.
Yeah. And I was speaking to a medical practitioner, a physiotherapist, and she has she's bumping against that. But when she claims in Discovery, they pay X. If she's VAT registered, they don't increase it 15%. They're paying X.
That's it.
So, suddenly it's a case of...
Now I'm not incentivized to grow my business beyond.
There are some easy wins. So Transnet and Eskom are not easy wins, but there are easy wins out there that would just, help us move in the right direction for growth. We've got the turnover tax also for small companies. That's just kind of got lost and vanished. That should be getting pushed left, right, and center. That is, if you do X amount of revenue, here's how much tax you pay. Don't worry.
That's it.
Paperwork is zero. Simple.
I suppose paperwork is another part of why things go the way they go and why expenditure looks the way it does is there's not enough paperwork or there's too much paperwork and things get lost in the paperwork. So paperwork might be part of the problem, I guess. But what we are very clearly understanding is that the solution is not to just increase VAT.
No.
Because as you said in Market Matters, if we start just doing that over and over
Every
and
time
over,
we have a problem, we get VAT to 50 before we blink.
that's it.
I remember when GST was 4%.
Wow.
Yeah.
Okay. The answer is not to increase the VAT. There are other ways, and there is definitely fat that can be trimmed. We'll see how the 12th of March unfolds. We suspect we're going to get a VAT increase regardless because, well, nobody really listens to our show from Parliament. But we'll leave deep dive on that note. We're going to get into investor insights. We're going to look at the craze that's taking over in terms of the increase in corporates and companies and asset managers taking on Bitcoin. Seemingly that is now growing in popularity, but that's where we're leaving the deep dive this week. And we wrap things up with Investor Insights. We're taking a look at the Bitcoin world or the cryptocurrency world. It seems that's growing in popularity, particularly with asset managers and fund managers looking to allocate monies into that. We might have a Bitcoin or even a crypto specialist come join us at some point to look at this. But for now, we're going to be taking a look at it. We're going to try and see if we can make sense of it. And we're also going to update our wall. We might be adding some very interesting things to the wall that we haven't put on the wall in the past. So stay tuned for that. And we'll be back to that in a second. The Bitcoin side of it. I mean, Bitcoin was the biggest scam in the world until BlackRock decided to launch an ETF.
Well, I mean, so Bitcoin in of itself isn't a scam. It
Yes.
is used. I mean, things like ransomware and that sort of stuff is fully enabled. Without Bitcoin, it couldn't exist. So, I mean, absolutely in that regard. But it was very much legitimatized. What it was just last year.
Yeah,
It was
the
just a
SEC
year ago.
ruling that you can have ETFs on cryptos and ETFs on Bitcoin. I mean, granted, there were a lot of people that believed in the currency or the cryptocurrency and the cryptocurrency world before that. And there was also a lot of speculators saying who created the coins and all of that. But the reality is we didn't really see institutional flow into it
It's
until
outside
those
of,
ETFs.
outside of MicroStrategy. And at that point, it was 40,000 and now it's 95.
Michael Saylor is just loving his life right now.
So he does wonderful. So he sells zero coupon convertible bonds, which he then goes and buys Bitcoin. And currently his stock is trading at about, well, last time I checked, about 2x of NAV.
It was a ridiculous amount. I'll tell you where his share price is at the moment.
But it's like twice NAV. I mean, it's
yeah,
like,
and that was just because of the Bitcoin holdings. Every time, it's one of those things that's going to go down in history as either the bravest thing a CEO's ever done or the most unnecessary thing a CEO's ever done. But if we look at the fact that the share price at the start of last year would have been around call it, so February of last year kind of moved up from $46 to about $100. There was a 100% increase there already, right? 103% or so in that month. From that $100, at its peak in November of last year, in a year, peaked above $500. And that's just plainly because he went long on Bitcoin and he went long at the right time, I suppose, right? So share price now back at 300. Even if we say MicroStrategy goes out at $200 or whatever, from a $40 move where a share price hadn't been moving. I mean, you go back to the pandemic, and pandemic was like $15, $17 or so. Never would I have thought we'd see a $500 stock on this.
Nope.
That's crazy.
It is crazy. And I mean, it's a ballsy strategy. And initially it didn't look like it was working. But it almost becomes self-hyping. There's folks all over the place who can now suddenly actually get crypto exposure because their mandate says, well, you've got to buy a listed, NASDAQ or NYSE listed stock. Well, couldn't buy crypto. Now you can.
Now you can, right? Now
You're
you
paying
can.
2x for it effectively, but
Yeah, but I mean, if it's either that, so buy a $300 stock or go buy Bitcoin at $68,000, which is what one of our local guys has done in Altfest. They've gone out and bought Bitcoin, and they're now going into holding Bitcoin as well, which
it's a strategic reserve to secure you against macro something. Yeah,
something.
but they did. They bought a Bitcoin.
They bought a Bitcoin, right? But that's again what we're coming to is the growing popularity of how to access the world of cryptocurrencies. Now that institutional money is getting involved as well, you're going to now see, I suppose, more stable movements, less volatile movements. You are still seeing quite a bit of volatility in the Bitcoin price, but you're likely to see a more controlled kind of rise up, rise down, cycles starting to come into effect, less demand supply driven, because the instos hold quite a bit of those coins and they can now influence
so
things.
it should start to bring, and it's what will happen as it matures. Because right now, what is Bitcoin? It's not a currency. It's not a store of wealth. It's not a hedge against
It's being
inflation.
pitched as a store of wealth.
I know it's a volatile option on the S&P 500, right? It is a volatile risk on or risk off, depending which way you want to trade it. That will perhaps over time sort of kind of edge its way out as it gets more and more adoption. Look, I hold some crypto.
I wonder though, so I mean, from a store of wealth perspective, gold has always been that historic store of value, and gold prices now at all-time highs, still heading for that $3,000 mark, $3,000 an ounce level. How do we... I mean, everybody's always come out and said, oh no, Bitcoin is the new gold, it will replace gold and all of that. And the volatility that's been caused by Orange Mussolini has been evidence that gold will always have a place in people's hearts. He now, side note, we're going on a little side quest here. He now wants to go and count the gold bars inside Fort Knox.
Hey, well, I didn't realize they haven't counted those since 1974.
They haven't done that in a while, yeah. So is he going to sit there with an abacus? Seems like it.
I think he's going to do a photo op and then get the hell out of Dodge, is my sense. But I mean, is Bitcoin the gold? Not at all. Not at all. And I mean, I know lots of folks say it's digital gold and stuff. Well, maybe it is, but it's not gold in the sense that gold has utility. And in the sense, so let's be clear, gold is much more easier to store and be safe. It doesn't require a huge amount of electricity to keep my gold going. And I also hold myself some gold. The problem with crypto, there was another hack on another exchange this weekend. Apparently it was
Yes, I saw that. $1.5 billion.
$1.5 billion. A very clear thing. If you hold crypto, man, if it's not your keys, not your crypto, put it in a hard wallet.
Yeah, and you mentioned that because the exchange that was hacked is the second largest exchange in the world, I believe. So that clearly shows you that if that can be hacked in the digital age that we live in, then maybe we should go back to the Stone Age and go back to cryptos. And go back to gold. But that's not for us to decide. If members of our community have a view on crypto, we'd love to hear it. We're not saying crypto is bad, but as I said, it's not gold. We're going to update the wall. We're going to add something interesting to the wall. We don't often look in this realm, but Sai particularly likes the currencies at the moment.
So 1830 is a big number on the ZAR. Go look at a weekly chart going back. How many years is my weekly chart going back? Plenty years. And for some reason, it just decided it didn't want to play out.
Weekly chart?
Yeah, weekly chart.
Okay, I've got it. 1830.
1830, just
Right.
like all the way back. I mean, we were playing there mid 22, the late 22, through most of 23, 24. We keep on coming back to that 1830.
Yeah, I mean, look at that. It's right in the middle of everything.
Big fight. We got there this morning. When I woke up at 4:45, we were trading at 1830. We've now weakened out. That is a big fight space. And if that breaks, I mean, 1780, 1720, 1680, all these crazy numbers we've heard suddenly start to come into play in a heck of a hurry. And I think it's going to break. And I think the break, more than anything, perhaps, is going to be less about rand strength, more about dollar weakness. I want to sell dollars.
Okay. Why would there be dollar weakness other than...
So we saw this, I mean, a couple of things. We saw this in the Orange One's first term,
Yes.
where when he came in, there was significant dollar strength. The DXY, which is the way I track it, it was doing great, and we saw it again now. And the short answer is that America is being, and this plays out more long-term than short-term, but it'll have short-term implications as well. America has been planet Earth's grandpa and policeman and nurse and, just some everything. Just general good oak or oak-ette. Those days are over.
Okay.
Those days are just over. There was an FT editorial this weekend, which basically said to Europe, yeah, guys, awkward that we have to break this to you, but America's no longer on your side.
Wow.
I mean, what we're seeing with Ukraine, et cetera,
Yes,
et cetera.
yes.
And that's going to continue through. What's happening with Musk and his doggy group, doggy daycare peeps, is the idea of cutting fat, and we were talking a moment ago about our local budget and stuff. Auditors, forensic auditors, you just don't go in there and say, yeah, I don't like this publication, cancel it, and save $30,000. You're trying to save $1 trillion. You say, oh, I've cancelled an $8 billion contract, except it's an $8 million contract. It's a 3-year contract, and $6 million of it has been spent. You go in with purpose and authority. What instead is happening is that they're weakening America. And I give you examples. Park rangers are being fired because what did you do last week? Nothing.
I saw that. I saw a comment, 2 things. One around every federal employee now needs to send through an email of sorts around what they did last
So who's
week.
going to read these 700,000 emails or however many it is? Secondly, you're a park ranger. What did you do last week? Nothing. You know why? Because no one fell off a mountain and there wasn't a fire.
But when there is a fire, you want me around.
And you're going to work 7 days, 24 hours type of thing. And again, it goes back to who's going to read these emails. The man at the FBI, I mean, to be clear, he sells T-shirts and vitamin supplements on a thingy-majig. He's got Mersh. So his name's Cash, K-A-S-H, and he does it with a $sign and stuff like that. I mean, dodgy stuff. I mean, the guy who's their Minister of Defense was a talking head on Fox. I mean, talk around inefficient government. I mean, America is gutting itself from the inside. Now, this doesn't play out this month, this year, even this term.
Yes.
But if Trump continues this for 4 years and we get, I mean, this is the gutting of America. Every single superpower on this planet, bar one, has collapsed. The one that hasn't is America. And that's because they're only 200 odd years old. We're watching the end.
Just to circle back to what you said. You said FBI and you said Cash. You were referring to the director of the FBI, Mr. Cash Patel, the new director.
The big man in charge.
Okay.
Yeah.
He sold supplements.
Yeah, he's also got some deal with some Chinese tech firms, and it is dodge. Remember in the olden days when presidents would declare their tax returns and put their assets into blind holdings? Now we've got an FBI director who's got connections to China via he did some consulting for some crypto. I forget the details. Just dodgy stuff that you should not be allowed to run it. Well, maybe you could run a school PTA. The FBI.
Don't let your current job stop you from dreaming big. That's what we're taking from this. If you currently want to be the director of the National Prosecuting Authority in South Africa, which I guess would be close enough, you know what? Apply. You never know what's going to happen, because apparently in the United States, you can apply for any job and you might just get it. But that's not what we're adding to the wall. We are adding the rand to the wall. We are bullish on the rand, which means we are shorting the dollar, which means we could potentially be shorting either the DXY, the dollar index, or we could just go straight for it and go for a play against the USD ZAR. That would be a direct play on the rand and less on the US dollar in general, which, as Sai said, might not happen now, might happen over a bit of time. And the
DXY has moved from 110 to 106.5, which for that index, and that has been since 13 Jan, call it 6 weeks, that is a monster move.
6 weeks.
Yeah,
that's a monster. Okay, there we go. You heard the monster move. You heard where we stand on it. What we're going to put on the wall. Please remember, folks, not financial advice. The disclaimers on the show. Don't come back and say we told you to do this, and that's what we're liking. That's how we feel about something. You have your own feelings. Please trust your own feelings. Do your own research, and don't blame us when that doesn't go according to plan. Otherwise, it makes for a very awkward conversation after the fact. But our unfiltered opinion of the week this week, courtesy of Sai. What are we looking at?
Joburg is not a failing city. It's a failed city. Potholes, no water, broken robots. The city has failed.
We're going to leave the show on that note. Thanks for tuning in. If you've missed our episodes, you know where to catch up on them. The live stream, the social pages, they're all updated. All of our episodes release on a weekly basis, so you can catch up on them at any point in time. And until next time, investing isn't hard. Just try it.